Hey guys, welcome back. I hope you had a really great weekend and an awesome day trading on Friday. So last week was the first week of September and it was an absolute bloodbath. The S&P 500 had its worst week of the year and the Nasdaq had its worst week since 2022. And we opened on Tuesday because Monday was Labor Day. So Tuesday we opened with a gap down. We did kick off September with that down gap. And if you recall that previous Friday, we closed up, but we didn't close the rest of that bear gap that was between where we closed and all-time highs. So we made all-time highs back here in July, and the day after that we gapped down. And then we did not close that gap last week, not last week, but the week before that on Friday. And then we gapped down on Tuesday. So right off the bat, we started the week with a rejection from all-time highs. And from there, we actually got hit pretty hard on Tuesday. We ended up dropping underneath the 35 EMA and then going way past that and then pulling up just a little bit into close on Tuesday. Wednesday right here, you could see we saw that 35 EMA cross underneath the 30-minute 200 moving average. That is a bearish cross down. And then after that, that was a clear resistance for the rest of the week. So right here, and we got pushed back down. 35 EMA, we swung back up to it after coming down to the 50-day moving average. And then the 35 EMA slapped us down. This is Friday right here. And it took us down all the way down to the 30-day average volatility. So huge move to start the week, huge move to end the week. And we were not able to hold the 50-day moving average. We also had the 1 hour 200 moving average right here, which the 50-day and the 1 hour did try to catch us on Thursday. We lost it on Friday. And we also ended up filling Thursday and Friday the consumer spending gap that we saw mid-August after the inflation data. So we had PPI and then CPI and then that up gap from consumer spending, and that gave us that push to try and make all-time highs. And we did end up closing that gap out completely on Thursday and Friday. And then we dropped all the way down to where we were trading last month for inflation data. And that's pretty interesting because we do have CPI this Wednesday and PPI on Thursday. So we did bring it all the way back down, and this looks like a possible setup for an inverted cup and handle. If you like trading chart patterns, that is usually a pretty dependable one. And on Friday, SPY did close down 1.68%. VIX popped 12.47%. That is a big move in VIX to close the week. And we did not close within the implied move for the day, but we did stay within the 30-day average volatility. And one more thing before we move on to SPX. We do see the 30-minute 200 moving average, so we did see that bearish cross down on Wednesday, but we also saw that upward moving 30-minute 200 moving average, and we turned it downward. So now we have the 30-minute and the 1 hour that are pointing down, and the 50-day moving average, which is also the 2 hour 200 moving average, that is flat. So we do have some pretty bearish momentum here above the 4 hour 200 moving average and above the inflation gap from last month. So then let's take a look at SPX. And the down gap that we left open the week before was a little bit bigger in SPX. So all-time highs are right here at 56.69. Then we had the rest of that down gap from when we made all-time highs in July. And then we started the week on Tuesday, the day after Labor Day, with a gap down. And look at that, we gapped underneath the 35 EMA. And we crossed down here on Wednesday. It was a huge drop on Tuesday. Tuesday actually took us all the way down to the 50-day moving average. But once we made that cross down right here, 35 EMA was a resistance for the rest of the week. So when we popped up off of the 50-day moving average, 35 EMA was there to smack us down. When we got into this gap and pulled back up for Friday, 35 EMA was there and it really smacked us down. We went outside of the implied move. but we did stay within the 30-day average volatility. And here also we did have that 30-minute 200 moving average. It was momentum wise going up and up, and you could see a little bit on Thursday start to curl down. Friday we really got pushed down a little bit here. I didn't even get a chance to adjust that, but we see that shift in momentum in favor of the bears. So even if we do see a pop back up, this is facing down, and until it's facing up again, look to that as a place to go short. Look to it as a resistance. And again, we do have CPI on Wednesday, PPI on Thursday, and we did close just above the gap that we made right before PPI and CPI last month. And the 4-hour 200 moving average is right here above it. So if we do see inflation data, this 4-hour 200 moving average definitely looks like a good bounce point. We could see a technical bounce there. So either that 4-hour or the bottom of the inflation gap right here. And we are oversold here. We did see a huge drop last week. Whether you're bearish or bullish, don't get greedy in either direction. Just pay attention to where the levels are if we're oversold, and where we could possibly see bounces, where we could possibly see places to short. So then SPX closed down on Friday 1.73%. And for the entire week, we actually saw a little bit over 4%. I think it was 4.3%. Let's just measure it out for fun. For the week, it was down 4.3%. That is a huge down week for the S&P. And VIX again up 12.47%. And we did not close within the implied move, but we did stay within the 30-day average volatility. And then taking it over to QQQ. QQQ had an even bigger down week than SPY, and let's just measure it from where we closed the week before to where we closed on Friday, 5.76%. So huge down week, and we did start the week with a gap down above 3 levels that we really chopped around towards the end of the previous week. So we had 474, which I'm going to zoom out. Let's look at 474 was a previous support. So right here, support, then when we gapped down that level, we actually gapped completely underneath 474. And then when we swung back up, 474 was resistance. And we opened the week with a gap down underneath that level. So we did end up, after that battle around there, we did end up losing it, and we did get smacked down, and that took us all the way down to the 4-hour 200 moving average. There were definitely a few moving averages here. This I don't have extended out, but the 1-hour 200 moving average was here, the 4-hour right here. And for the first few days of the trading week, we traded between those levels, and we tried to hold it. The 1-hour with that downward momentum really hit us. And again here, 35 EMA, we started the week with that cross down underneath the 30-minute 200 moving average. Also, that 50-day moving average was up here as well. That was that third level that I was talking about. But we saw that cross down right here, and once we did, that was our resistance. You can follow it, and then you see as soon as we came up to it here, that 1-hour 200 moving average was there as well. But the 35 EMA, almost to the penny, hit us back down, and then when we swung back up, 35 EMA smacked us down. So huge level of resistance now to the upside with these moving averages that we lost last week. We did drop down all the way to the bottom of the 30-day average volatility, so almost to the penny. It was really close. We actually closed just 8 cents underneath what the 30-day average volatility was giving us. So I had it at 448 because I rounded it out and down, and we closed 448.69. Huge move on Friday. We took it all the way down to the weekly 35 EMA. And before I take it over the weekly time frame, I also just want to mention that we did close out this gap right here. This was an island bottom, and those can be battle zones. Even if there's not a physical battle right here, it always draws us in. Island gaps are meant to be closed. So when we were up here and I saw this island bottom, I'm like, we are going down. And that gap was a combination of the Amazon gap, where Amazon guided lower. So we had a little bit of that gap, And after we bounced here on the 200-day moving average, we came back up right to that Amazon gap and we gapped over it. So that was closed out on Friday as well. So over here, it's not a perfect formation, but this also could be something like a inverted cup and handle. So maybe if we start the week with a bounce, you can clearly see that 4-hour 200 moving average and 1 hour right here just waiting to be resistance. And if we do see a cup and handle formation, then maybe that will play out if you do like trading patterns. So then on the weekly time frame, that 35 EMA, which right here, it did catch us not perfectly, but when I switch over to this 5-year weekly candle, you could see the weekly 35 EMA right here. So this right here was December of 2022. So that was after we hit the bottom right here. And then 35 EMA right here was resistance prior to that. So you can see how huge this level is so clearly when we zoom out. But resistance here, resistance here, resistance here. Then when we got back up, this is where the bullish trend started, bottom of 2023. And once we got above that 35 EMA, we traded up. And then when we came back down, we bounced right there. 35 EMA came back up. When we dropped, when we pulled back, we bounced at the 35 EMA. So here, a little bit closer, we did bounce. And then right here, when we dropped underneath the 35 EMA, this was an absolutely critical level, and we did get pulled back up. And if you looked at this without my color overlay, the red and the blue candles, you would see that this candle actually opened down here and we closed back above the 35 EMA. So we did drop underneath it. We did not close underneath it. And then we went in for another bounce, and now we're back at the 35 EMA. So absolutely critical level. If on the weekly time frame you look at Stupid Willie right here, you could see that it has gone bearish, and it is in favor of the bears on this big time frame. But again, critical level, if we hold this, then technically we haven't broken the uptrend yet. And if we do drop underneath it, then just know that that 35 EMA could turn into a resistance if we do flip over to a bear trend on the bigger time frames. Awesome, awesome level to have on your chart. It doesn't come up in every single day's trading range, but when it does, it is an absolutely critical level. All right, so QQQ, let me go back to the 30-minute time frame, see if I missed anything. So we closed out this gap right here, and we closed right above that weekly 35 EMA. QQQ closed down 2.68%. VXN closed up 8.92%, and we did not close within the implied move on Friday, but we did stay within the 30-day average volatility. And then IWM, we did open the week also with a gap down, and then that first candle we tried to get back above the 35 EMA. We filled a part of that gap right there, lost it, and then that 35 EMA was resistance for the rest of the week. You could see we crossed down right here on Wednesday. We got that bearish cross, and then let me just get in a little bit closer. We came close to it here, got hit down, got close to it here as well, made it up to the channel that got close to it, got hit back down. So every time we swung up, and here to the penny, 35 EMA, but also just know that 1 hour 200 moving average was right there as well. So 35 EMA plus the 1 hour that had the downward momentum did bring us down, and it sent us all the way down to the bottom of the trading range where we had the 4 hour 200 moving average, and we filled most of this gap right here. We didn't fill it completely. That is a bullish thing, to not close out the gap completely. That is a bullish advantage. And add on top of that we are pretty oversold here. We could see a swing up off of this level with that remaining gap open. But this gap was the part of the gap that we didn't fill from that big drop that we saw, that we bounced on the 1 hour and 1 week 200 moving average right here. So there was a little bit of gap that we didn't close out, and we gapped over. So once we gapped over here, we pushed higher and we filled the gap above it, and then we saw that squeeze up to 222. Really big down week in IWM. I didn't measure this out before, so let's take a look. We closed the Friday before right here, and then we closed right here. So 5.5% drop for small caps last week. And here again, we did have that positive momentum going for us going into the week, and the price action for the week did pull us down and turn the moving average. We are now completely bearish. Not only do we have that downward momentum, we also had that cross down here. So IWM did close down 1.90%. RVX closed up 2.96%, and we did not close within the implied move. Oh, wait, I take that back. I remember last week, this was the strange one where the implied move was wider. So we did actually close within the implied move in IWM. Sorry about that. And I really quickly want to add that just because this is pointing down and the 35 EMA is underneath the 30-minute 200 moving average, it doesn't mean we cannot swing up and see a technical bounce day. But just know that 35 EMA is that first level of resistance, and if we do get above it, then that 30-minute 200 moving average definitely going to be a resistance level. So bearish in the technicals does not mean we can't see a pretty solid up day. And again, we are pretty oversold here. We could be due for a swing, at least maybe to the 1 hour 200 moving average. All right, and then lastly, DIA. DIA also had a huge down week, I should say, and look at how absolutely perfect the 35 EMA acts as resistance in DIA. It doesn't get prettier than that. So we opened the week right here. We closed the week before Friday right here at a previous resistance, and then we saw that as resistance. So we saw a double top right here and a drop on Tuesday to open the week. We got underneath that 35 EMA on the 30-minute time frame, and then boom, we got hit right there. We swung back up, hit again, dropped it underneath the 30-minute 200 moving average, came back up, and look at right here, 30-minute 200 moving average and 35 EMA right there to bring us back down. And then we did end up bouncing. I'm not even going to say bouncing, but we did end up settling right on the 1 hour 200 moving average. So massive down week in DIA. And let's measure from where we closed on Friday the week prior to that to where we closed, down 2.80%. And DIA did close down 0.98% on Friday, and we did not stay within the implied move for the week, but we did stay within the implied move on the day for Friday. And here again, we did have that positive momentum here, and entering into the week, we actually still had positive momentum, and look at how we turned that. This is actually a little bit flat, not quite turning down, but almost no matter how we open tomorrow, we're going to see that start turning down. And we also did see that bearish cross down right here. That was on Friday. So that was a recap of last week. And this week we're heading into a lot of economic data. Monday we have consumer credit. Wednesday we have CPI and PPI. Wednesday and Thursday, if you love volatility, those are going to be fun trading days. Friday, we have the import price index, the IPI, and also consumer sentiment. So lots of stuff to look forward to. We also have Oracle earnings reporting this week, and we have a lot of noise right now online because of the elections coming up. I'm just going to say, cut the noise out completely. Watch VIX and watch the volatility index. Don't get sucked into the drama because it's going to make you not think straight when you're taking a trade. Look to the technicals, look to options, look to VIX. That's all you need. All right, that's enough rambling. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, leave me a comment. This is really difficult stuff. Sometimes I go really fast through it. And if you're new and you have no idea what I'm talking about, then just ask. I always get back to questions, so don't be afraid to ask. And if you took a really profitable trade and you know it's because of something you learned here, then hit that thank you button and buy me a coffee. Now, this right here is the trading range for SPY. I still have about 2 hours to finish the other trading ranges and record, so I'm gonna go ahead and finish this video here. Set your alarm for 8 a.m. or 9 a.m., whatever time you need to get ready before the market opens. I'll have the trading ranges ready by then. But for now, hopefully this video was enough to get you prepped for tomorrow, and then just make sure you check back in tomorrow morning before markets open. All right, guys, have a great night, and I'll see you in a few hours.